Hello everyone, and you're watching Bitcoin Bubble news channel. You have an economy from the 20th century going on a broken system with bad assets. You can also take advantage of a digital chance to run your business on digital cash that is always available and will be useful for 10,000 years. It works for everyone, right? There is no level above or below that it doesn't work for. If you want to know how much something is worth in 20 years, look no further. There are more and more signs that Bitcoin's price is about to go through the roof. Some analysts think it could hit $66,000 by September. But there is strong resistance for the coin around the $61,700 mark, which could slow its progress. Bitcoin has previously hit this level of resistance as a ceiling, and it's still not clear if it can be broken. If Bitcoin does break through this important $61,700 level, it will be a big step forward in its rise. In a recent interview with Roman, well-known Bitcoin trainer Michael Saylor talked about how he went from being skeptical at first to realizing Bitcoin's power to change things. Saylor talked about how Bitcoin could change the capital markets by creating a fair and safe financial system and replacing traditional assets with digital ones. Besides that, he said that Satoshi's idea of Bitcoin is a conservative, unchangeable financial ledger that keeps value without losing energy. Saylor didn't like the scientific basis of traditional monetary economics. He said that these bases often lead to speculative investment ideas and bad ways of financing businesses instead of good solutions. If you want to see more crypto and Bitcoin news, check out our daily 5-minute crypto email before the rest of the video. It's a great look at on-chain crypto data and splits. And the best part is that it's free. In short, they'll talk about what experts think will happen, how on-chain crypto data is broken down, and any breaking news you need to know. To become a better crypto trader right now, click the first link in the description and enter your email address. Over 50,000 other people have already done the same thing. In 2013, I didn't have a need for Bitcoin and I didn't know much about the technology behind it, and the idea behind Bitcoin. I just had the thought of a casual thinker. Over the next 7 years, I think the main thing that changed was that I needed Bitcoin. Okay, to be clear, the most important thing is to need something. I make jokes with other people. I say that Bitcoin is for people who need to know. If you don't need to know, then you won't look any further. That's why the COVID lockdowns were the first sign of 2020. That and stopping the world economy completely will make you pay attention. There were also a lot of new ideas we had to try when the economy stopped and work stopped, like Zoom or talks that you can hold from afar. Everything I had turned down for 10 years, I suddenly agreed to in just a few days because I had to. It works for them because they can see Amazon and everything else. Why do we need Bitcoin? Or what do you think makes them get Bitcoin so wrong? Take a step back and look at the big picture. I believe that most experts don't even understand money. When you look at it, the Austrians were the only ones who really understood money. That being said, the Austrians did not have the internet, electronics, or encryption. In theory, perfect money is a shared, real record that can't be changed. No one in history has ever made a shared, unchangeable real record, right? Gold or a credit system run by a philosopher king were the most like money that actually worked. But it's not until Satoshi creates Bitcoin that you can see an example of a shared account. And by conservative, I mean not leaking energy in terms of thermodynamics or physics. Since we never had real money, I don't think that any economist who was trained in the classical tradition could have come up with a way to understand money that was based on engineering, physics, or math. Next, since they don't have a scientific or physical basis for monetary economics, they don't have a scientific basis for economics either. That means that everything that comes after, like the idea of corporate finance and investments, is also not based on science. So you have people working on what you might call a particular solution to a problem, but not a whole solution to the problem, a set of rough rules that only work for a certain amount of time and under a certain set of assumptions is the specific answer to the problem. It looks more and more likely that Bitcoin's value will go up a lot as the crypto market continues to change. A well-known supporter of cryptocurrencies, Michael Saylor, recently pointed out that while older generations had their own problems, in this age of plenty, there are some great possibilities. He thinks that Bitcoin is changing the way capital markets work and that it is providing new ways to keep and grow wealth. Saylor says that Bitcoin is changing capital markets because it is a safe way to keep value. He suggests taking out low interest loans to buy assets like Bitcoin, which has grown by an amazing 500% every year. Saylor says that people who are new to Bitcoin should spend 100 hours learning about it before they put real money. He also agrees with the idea of borrowing money under the right circumstances but warns against using short-term tactics or too much leverage. Saylor says that buying Bitcoin with stock could lead to big returns, which makes now an important time to think about investing. Let's go back to the talk and watch some more clips to learn more from Michael Saylor. In the past of people, starvation has been the main cause of death. We are no longer going hungry. Metabolic sickness is the main reason people die today. Either we eat or drink ourselves to death. I believe that having too much leads to trouble. And Bitcoin is a form of digital money. In other words, it changes the way the capital markets work and lets you hold on to money for 3,000 years instead of 30. That's right, it makes your cash last longer. You could move the capital around at 100 megahertz instead of, say, 10 waves per year. It's kind of something. That's a lot faster, right? High frequency oscillation and long-term economic life are two things we have. That being said, we still don't know how to handle benefits. How should we handle the fact that people don't agree on global warming? Our views on foreign affairs are different. As an individual family with a lot of real estate, you could borrow money through a government-backed mortgage for 30 years at 3% interest, which was the case in the US 2 years ago. If you could do that and bought Bitcoin, which is increasing in value by 55% per year, it would be smart to borrow €1 million or dollars, pay 3% interest for 30 years, and then invest it in something that's going up faster than 3%, right? That's how you really get rich. That's the best way to get rich, right? Basically, you go with leveraged, long-term, attractive property. Take out a loan for $100 million to buy a $100 million building. Then, let inflation raise the building's value to $200 million. You've now made $100 million on $5 million of stock. How do you go from $5 million to $100 million? You have to put up $5 million from your own money and borrow $100 million to buy something that will go up in value. These are the things MicroStrategy has done. To put it simply, we did it with digital real estate. I mean, Bitcoin is the most sought after thing in the world. We did it before anyone else understood how this worked. Of course, I'm telling everyone, some people will do it, but as the saying goes, everyone gets Bitcoin when they earn it. Because you need to learn about Bitcoin for 100 hours before you can value it as digital property. Then, after putting in the 100 hours to figure out that it is valuable property in cyberspace, it's very easy to do. You buy it with cash on hand or money that comes in from making money. Then you ask, may I borrow some money? And you should be fine if you can borrow money with terms that mean the loan won't be due for at least 4 or 5 years. When you borrow money, you shouldn't take on 10 times your mark-to-market debt, because that's unstable capital that could wipe you out in a volatile market. So a short-term note for cash is not a good idea, but a note for 10 years, 20 years, 30 years, 30 years, or 7 years is a good idea. Do not mark the market. That is a great thought. To get more money, you can sell shares. For example, if you owned a supermarket